Imagine this. Breaking news flashes on your phone. U.S. launches large-scale military operation against Iran. Oil prices blast higher. The stock market swings like a cheap hammock. Your Telegram group explodes with panic-selling memes. And in the middle of this chaos, there's one guy calmly sipping his Coke, not even checking the news every 10 minutes. That's Warren Buffett. In this video, we're not going to guess what Buffett might think. We're going to look at his real, old statements and quotes about war, money, and investing, and then apply them to a scary scenario. What happens if the U.S. goes into an all-out war with Iran? You'll learn how Buffett actually thinks about war and money, what he would probably do with his investments, and what this means for you in simple, everyday language. Before we dive into war, let's quickly meet the man behind the myth. Warren Buffett is the Oracle of Omaha, a billionaire investor who's been building wealth for over 70 years. He's famous for one big idea: think long-term, stay calm, and ignore most of the noise. He lives in the same modest house in Omaha since the 1950s, drives a normal car, and still buys cheap Wendy's burgers. He's seen more market crashes than you've seen seasons of your favorite show. Why does that matter? Because when Buffett talks about war, he's not guessing from a TV channel. He's talking as someone who's lived through World War II, the Cold War, 9/11, the 2008 crisis, and multiple geopolitical shocks. So when you hear, "This is what Warren Buffett says about war," know that it's not just some AI-made opinion. It's him, on record, from real interviews and shareholder meetings. Buffett doesn't like to talk politics, but he does talk about war and money. And his message is pretty simple. In war, money gets weaker, but some assets get stronger. Here are his real ideas in plain language. 1. Cash usually loses value in war. Back in 2014, around the time of the Ukraine crisis, Buffett told CNBC something very clear. When a big war starts, the value of money usually goes down. He said, in effect, if we went into some very major war, the value of money would go down. That's happened in virtually every war I'm aware of. Translation: if the U.S. suddenly spends massive money on weapons, soldiers, and equipment, it usually prints more dollars. More dollars chasing the same goods equals prices go up. So cash in your bank account slowly buys less. He even joked that cash is like a piece of paper that doesn't protect you when the money itself is getting weaker. 2. The last thing you'd want to do is hold money during a war. Buffett has repeated this idea in different ways, but one version is very famous. The last thing you'd want to do is hold money during a war. He doesn't mean you should flush your life savings down the toilet. He means don't just sit there with all your money in cash waiting for the war to end. Because while the war drags on, inflation quietly eats your cash. He's also warned that this logic applies not just to dollars, but to gold and Bitcoin too. Gold and crypto don't print food or build houses. So Buffett prefers something that actually produces value over time. 3. Prefer productive assets: farms, apartments, stocks. Buffett often says, in war or crisis, you want productive assets. What does that mean in simple terms? A farm that grows food, an apartment building that collects rent, a business or stock that sells real products and services. He once said something like, you might want to own a farm, you might want to own an apartment house, you might want to own securities. Think of it this way. If you have a pizza shop, people still need to eat, even in war. If you own an apartment building, people still need a place to live. That's what Buffett calls a productive asset. Compared to that, cash under your mattress is like a burger that never gets eaten. It just sits there while its value gets smaller. 4. Stocks have survived even big wars. Buffett also points out a simple fact from history. Even during World War II, the U.S. stock market kept rising over time. He said, during World War II, the stock market rose. American companies kept getting more valuable. He even joked that if he had invested $115 in a simple stock index in 1942, it would have grown massively by the 2000s, while the same money in gold would have done much less. So his core idea is, over the long term, strong businesses are likely to survive wars, politics, and even bad presidents. And remember, all of this is Buffett's real, old advice, not something this video is making up. Now let's imagine the worst-case scenario. Not to scare you, but to understand how Buffett's ideas would apply. If the US suddenly goes into a full-scale war with Iran, here's what could happen. Oil prices spike. Gasoline becomes more expensive. The government spends billions on weapons, soldiers, and logistics. More debt is created. More money is printed. Inflation rises. The dollar buys a bit less every month. The stock market swings wildly as people panic. This sounds dramatic, right? But many of these effects are exactly what Buffett has warned about for decades. He's said, when governments print more money to fund wars, cash loses value. So staying in pure cash is like trying to survive a fire by just staring at the thermometer. You'll see the temperature rise, but you're not doing anything about it. This is where his old advice kicks in. If money is going to be weaker, own things that keep producing value, not just paper dollars. Let's be honest. We can't know exactly what Buffett would do in the US-Iran war. But we can look at how he's acted in the past and what he said in real interviews. Here's how Buffett-style thinking would likely play out. 1. Stay super calm, don't panic sell. Buffett has repeatedly said he doesn't sell stocks just because there's a war or a crisis. When Russia invaded Ukraine in 2014, he told CNBC he wasn't planning to sell anything. In fact, he said, "If stocks are cheaper, I'll be more likely to be buying them." So in a war-like scenario, Buffett would probably ignore the 24-hour news screaming, not pull all his money into cash just because the headlines look scary. This is his real mindset. Be fearful when others are greedy, and greedy when others are fearful. In other words, when everyone is panic selling, that's when Buffett might quietly look for opportunities. 2. Focus on companies that keep making money. Buffett looks for businesses that are still useful in chaos. Insurance companies, utilities, basic consumer goods, anything people still need every day. If you think about it, even in war, people still need electricity, water, food, and basic services. So owning shares in companies that provide these can be safer than chasing war hype stocks. Buffett would likely avoid betting on short-term rumors like Company X will profit from missiles. He'd rather buy strong, boring businesses that compound value over years. 3. Keep building a portfolio, not a bunker. Buffett's famous line about war and cash is crystal clear. The last thing you'd want to do is hold money during a war. He's not saying you should go full Mad Max into a jungle bunker and buy guns. He's saying, put your money into productive assets, like stocks in real companies or real estate, not boxes of cash or speculative coins. In simple terms, Buffett isn't refreshing Twitter every 10 minutes. He's checking his portfolio once a year, eating a burger, and trusting that American businesses will keep creating value over decades. Okay, we've heard Buffett's real ideas. But you're not a billionaire with a private plane. You're just somebody who wants to protect their money and not lose sleep over every headline. Here's how you can apply Buffett's real, old views to your life. 1. Don't yank everything into cash. Buffett has warned people not to move all their money into cash just because there's a war scare. If you do that, you're basically doing the opposite of what he recommends. You're betting on weaker money, not on productive assets. Instead, keep some cash for emergencies, but leave the bulk of your long-term money in diversified investments. 2. Prefer simple, long-term investments. Buffett often praises simple index funds or ETFs that track the whole market. You don't need to be a genius stock picker. You need to buy a diversified portfolio, hold it for years, ignore the daily noise. Think of it like a garden. You don't dig up your plants every time there's a storm. You water them, protect them, and let them grow slowly. 3. Stay out of war hype gambling. When tensions rise, some people rush into super speculative stocks, crypto, secret war profit schemes. Buffett has warned against this kind of gambling. If you're going to panic, at least make it funny. Panic buy a bag of chips, not a meme stock. The point is to stay calm, diversified, and focused on long-term value. So here's the Buffett-style headline for this whole video. In the long run, the best weapon you have isn't a missile. It's a boring, well-built portfolio. What do you think? If you had to choose one asset Buffett would trust more than cash in a war, which would it be? A farm, an apartment building, or a broad stock index? Drop your answer in the comments. And if this helped you understand Buffett's real views on war and money, hit like and subscribe. Because when the next crisis hits, you'll want to be the person who already knows. Hold less cash, hold more value, and don't panic buy gasoline. Thanks for watching.